Chapters.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's like a great night, folks. Getting better. By tomorrow, I might look normal. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market-wise, let's take a look at it out here. We have the Dow Industrials down 27, NASDAQ off 144, S&P's off 27, gold contract down $11.10, trading at $19.36 an ounce. You have silver flat, $23.38 a barrel, an ounce. Light sweet crude, got a nice bid, up $1.60, $88.88. Notes and bonds, you get the 10-year note, up 2 ticks, trading, how did you do that? Whoops. Trading at 109.27. You have the 30-year up 11 ticks at 119.13, and King Dollar. King Dollar's a trip, man. There's no two ways about it. You got King Dollar right now. Stop doing that to me. Up 151 ticks, trading 104.719. The euro's at 107. The yen is trading at, there we go. The yen's trading at 147. The British pound is at 124 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, what we have here is the battle between the bulls and the bears. But in both cases, right, you actually, you can see when we, bottom line, go down, there's no sellers. When you go up, we've had if we go back to that, what's that, the 29th of August, that was a sign of strength there. You're just messing around in here, man. The bottom line is that the SPY yesterday did 60 million on the way up. We're not going to do, we're going to do about 52 on the way down. Now, 52 now is going into that 83. So that's not enough to break down. We go to the Qs. We take a look at the Qs. You got the same type of setup inside the Qs. What you have with the Qs out here, you're doing 30 million right now, down 420. You're going into 52, as well as 58. You need more sellers, to get this to the lower market. Notes and bonds, okay? So we've been talking notes, bonds, dollar. That's the correlations out here, big time. So we had in the note and bond market yesterday, you had a rejection of lower price. You had much lighter volume. And today, you don't have any buyers either. You basically, went higher, okay? But when you go higher, you should have more than 842,000 also. We tested, 2 million contracts yesterday with 900,000. And then we go over, let's go to the gold contract. So the gold contract today got down into the 1929 area, a rejected lower price. Now, this is pretty cool, man, because You only had 150,000 contracts. I think we're going into 178. We're going into 170, 167. And then good old King Dollar. So you get King Dollar. This is the number, man. This is so weird. It's not weird, but the bottom line, this is a magic number. You know, it's the 104,699. Take a look at this. That's your swing. Put this up. It's been messing with this thing for a long time, man. You know, when you look at it, yeah, it's only 5 days, but this was trying to get here for a long time. And you can see right now, you're at 104,711. So we're talking 699. We're only talking, 12 ticks away. Let's go to John in Philly. John, what's going on, brother?
Hey, Big Tom. Thanks for taking the call. And by the way, thank you for reading the note regarding Bud in Taps yesterday. That was just terrific.
Wasn't that cool? Yeah. It was so cool that, you know, Nancy sent it to us. Nancy is his wife, of course. And I'm so glad I got it yesterday. It really worked out because, you know, the day before was a year from his passing. So it was pretty cool.
Right, right. Tom, I would like to ask you to take a look right at the top of your show here. GDX, please. I'm going to listen to you off the air, but I wanted to share my observation.
Okay.
COMEX Gold has been bleeding lower for now 7 or 8 consecutive trading days. That's true. Interestingly, GDX is up today and well off of that August 21st low.
Yes.
Could you look at that and share with us what your read of that phenomena is? So I thank you in advance. I'll take this off the air.
Okay, cool, John. Have a great one. Have a safe one, man. Yeah, what's happening here, folks, is that, you know, it's easier to jam the future market than it is to jam the GDX. That's the first place, you know. And the futures market, gold in the futures market has really held up well for the dollar being as high as it is. You know, and look, my take is that, you know, the 104,699 is going to fail. The GDX itself, okay, you know, is going to need more volume, but, you know, it came back to its strength, came back with tremendous, there's no sellers, man. It came back with 13 million shares going into 38. 38? No, 30. I mean, that's how you want to see a retracement, man. That's like insane. You know, so bottom line is that this wants higher price. Now, when you go inside the gold market, meaning the equities, you still have some heavy divergence. You know, there's a few of them that, you know, don't look that great. But overall, you know, as you can see with the GDX, the XAU, the HUI, they're all up. So that says quite a bit, because the bottom line is that, you know, they're buying them. You know, the XAU rejected 114 today. It's trading 115.35. The Gold Bugs Index rejected 219. You're trading 223. And both of those also had anemic volume when it was trying to test. When it did test the strength as it came off the bottom. Stay right there, folks. Come right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kickstad's Tiger Forex Report. Teddy Kickstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials are trading down 40. We get the Nasdaq off 149. S&Ps are off 29. Let's get over to our man, Mr. Basil Chapman, as we do each and every Tuesday. And don't forget, folks, Basil has an outstanding show every trading day, 10 to 11 Eastern Standard Time. Also a great newsletter, Mastering the Opening Call. Now, it's very easy to get the opening call, folks. You come over to our website at TFNN. You're going to go into newsletters. You'll see it on the left-hand side, the second one down. You can get the opening call for 1 month for $149. You get it for 6 months for $695, which is $199 savings, or 22%. You can get it for 1 full year for $1195, which is a savings of $593.33%. Now, they all come with a 30-day money-back guarantee. So the bottom line is that you can take any one of them you want, check it out. As soon as you get, Matt, the opening call, what you're going to see is that Basil has about 12 or 13 great archives there. Every Saturday, it's almost like he does a webinar on Saturday. So go check it out, folks. Great newsletter. Basil Chapman, what's going on?
Hi, Tom. How are you feeling?
I feel good, man. I just look weird.
Yeah, sometimes these things happen and we just have to cope with it, but you're doing great.
Yeah. It's a lot easier talking today than yesterday. I can tell you that.
Yeah, but it was important that
exactly. I wasn't going to not do the program.
Right. Was terrific. Really.
Right.
I miss him a lot.
Yeah.
So, I thought I'd just do this just to kind of give an overview of where I am with subscribers to my opening call, using the techniques in the Chapman Wave methodology. Okay. So I'll just do a quick review. So using one of our particular indicators, these technical tools, I always talk about, it doesn't mean anything. It used to mean a lot when I talked about my Sears and Roebuck toolbox. Nobody even knows what Sears and Roebuck is anymore. But anyway, I have just a plethora of tools that sometimes you need them and sometimes you don't. Sometimes I just put the moving average on the chart and just wait for it to come and hit that particular level, and then it becomes important. So let me just go through this. On the left is the Dow chart. In the middle is the weekly Dow chart. On the right is the monthly. So on the left, you can see it's got these notations. It's got this extension. It's got this blue line and a parallel blue line that's called the Chapman Wave one-to-one parallel extension. It's basically like your A to B equals C to D. That's the use here, but it comes about when I've got a pattern that I call the falling X, where I've got lower highs and much lower lows, and then all of a sudden it forms a support level. It looks like this, forms a support level, and out of the blue, what looked like a terrible chart becomes a very positive one because you got this cup formation. And then once it breaks this resistance line, you can go 1-to-1 to the upside, which is what you saw over here.
Yes.
But what's important also is I'm looking at basically 3 patterns: straight up, straight down, cup formation, arch formation. The cup could be a V and the arch could be an inverted V, but it's basically going from one point down and then back to that point. So if it comes down sharply, and then with the first or second peak called alphabetically peak A or B, the second one, and takes out that left side low, it can go quite a bit low. You can just see the little bit of chart you're looking at here. You went down sharply. There's that straight line. Then it failed at a peak A and B, and then it turned down and took out that left side low. Then it did it again at a peak A. So that's important. So this technique is called the dreaded H because if it's red, because if it takes out that left side low, it can go a lot lower. And on the right, you've got the inversion, the reverse, the green, very positive reverse Y pattern. If it takes out the left side high, you can see right here, that's a little Y pattern there, the little cup formation, took out that left side high, went much further. Then there was another one, almost like a V, went up to that peak E top at 34,257 on the 1st of May. 1st of May. Now, this is the last one. So that's still from way back. So using these techniques, very simple techniques, they look complex because I like to keep them on the chart so that subscribers, when I'm in the den during my show, 10 o'clock to 11 o'clock Eastern time, people can see these things. So there's another technique that I use, this falling axe pattern, the lower highs and much lower lows, and I make a parallel, a little mini channel at the outer end. And look how it becomes a repellent zone. Every time this is the Dow daily, every time it got there, it made this H pattern, and then it started to fail. So I use a particular technique using on-balance volume. So we got the exact high on the 1st of August at 35,679 to go short. We still short the Dow because we keep making these arch formations. So it's fascinating because the daily is in a sell mode. The weekly hasn't yet generated a sell signal. It's still in a buy mode, and the monthly chart the same thing. So I thought I'd just go through some of the patterns. I'll go through them in more detail during my show, say tomorrow morning at 10. But there are a couple of other things that I do as well. So you had been speaking about the dollar. So the dollar, I use another technique. I call this the technical tool of last resort, and that's where I look at the 9-period moving average over the 14. And one of the things that I've been looking at, and one of the reasons why I used one particular tool to get the Dow top, but it was really 9 sessions later when the 9-period finally crossed negative and said, uh-oh, now you've got a problem. So the dollar's we are still long the dollar for subscribers to my opening call. The dollar's had a really good rally, but you can see this green 9-period moving average is still way over the 14-period moving average. So I always have to put it in time frames. If you look at the weekly chart, it feels like a big deal, but all that the dollar has done really is just gone from the lower boundary of the rectangle, went under it, made this H to a lowercase m pattern, and now it's reversing and it's making the cup formation. So the big thing for me is the dollar on a weekly basis. It can do it intraday, it'll be fabulous, but on a weekly basis, if there can be a close above this high right here, the week of the 10th of March, with a high, this is the dollar index, a high of 105.88. If there is a close above that, that'll say that is very good action. Right now, it's really, I treat it more as a counter trend rally, but it has significance because it coincides with many other things. So I just thought I'd show this pattern. And then I'd spoken to you last week. There's a particular stock that we have, which is in the uranium area, EUC. This is the name is called Uranium Energy Core. The symbol is UEC. So I had drawn in this pattern for subscribers. First, I drew in this cup formation, the one I was talking about before. And within that, I have what I call symmetry, where the bars on the left side equal the number of bars on the right. And you can see I've drawn this in. This particular pattern goes all the way to right there. It goes to the 9th of August. And on the 10th of August, the number of bars on the left from the 388 high, it was way back here in February, finally came through, and it went all the way to that level. And the whole thing about this 9-period moving average, look, it's still green, it's still green, it's still green. Even as we speak, it's green. So we're in at about $3, and we started along at about $3.48. And here it is at 486. We took we're taking little bits off. We took about a 42% gain, but we still have this core, because another technique that I use is a Chapman wave cup and ladle pattern. And it says that if after the left side lip there's a sharp pullback, you break through that left side in leg C, you should still go to D. And look, here's this bar, the symmetry, and we've broken out. So this so far is a nice pattern that we're looking at.
Folks, come over to our website at TFNN. You're going to go to newsletters. You go to as soon as you hit it, you'll see the opening call on the left-hand side. Basil, you have a great one, safe one. We look forward to the show tomorrow morning.
Thank you, Tom. You too.
Okay, stay right there, folks. Come right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow Industrials up down 42, NASDAQ down 146, S&P's off 30. And, if you saw that game last night, folks, Aaron Rodgers, big deal, coming to the Jets and the Bills, and third play, he rips apart his Achilles heel. The poor Jets fans, man, they've been through everything. Now, the Jets won the game. But, we talk about we're in the risk business, and it's like I was looking at that contract. So Rodgers has a $78 million guarantee. for 2 years. He has a 3-year contract, but $78 million is guaranteed. So we'll see how this goes. Hopefully, he's out for the season, though. It's pretty intense. Let's go over to our man, Mr. Tim Ord, as we do every Tuesday and Thursday. And don't forget, folks, you can get hold of Tim every trading day at Ord, ord-oracle.com. That's ord-oracle.com. Tim Ord, what's going on, brother?
All right, I sent some charts over. We can start right off the charts if you want.
Yeah, absolutely. And no matter what market we're talking about, Tim, these bulls and bears that seem to be fighting like crazy, where it's kind of sloppy, like you've been saying for a while. But what a trip, right? So the first one I have is the GDX. Is that correct?
Yeah. Well, actually, we can skip if you want to look at let's look at the S&Ps a little bit.
Okay. Which one was that?
Chart 4. Chart starts at chart 4.
Okay. Cool.
And because you're talking about that, and here's what I'm looking at. You got chart 4 there?
Yeah, with the trend?
Yeah, it's a trend.
Yes.
So this kind of looks at the bigger picture, and really has been, over the years, has been pretty accurate. But anyhow, the bottom window is a 10-day trend.
Yep.
And the pink up and down areas is when the trend gets above 1.2. So you really, on a 10-day trend, anything above 1.2, chances are you're going into a bottom. And the more you get of them, the more significant that bottom is. And if you look over this chart goes back a couple of years, almost 2 years, and I've highlighted that area, which is between 365 to 390. That's a massive support area because that's where the 10-day trend was up around at least 1.2 and higher. So the build a base went sideways for about a year. Then we rallied out of that area going into the current time frame. And what I really want to point out here, if you go to the bottom window again, you need really to say when you get up to 1.2 is really you're building a base.
Right.
Because that's when markets panic. When markets panic, they're building a base. If you don't have panic, you don't have a base. And usually anything around 1.9 and lower is usually kind of a bearish sign for the market. And I got that noted with the kind of green area across the chart there. And a lot of times it came at highs. The last time we got there was in June. And we're 0.95 right now. We're awful close to that area. So we're not seeing a panic in this sideways move. We almost got like euphoria, I guess.
Yeah, and at 1.9, you certainly do, man. Right?
Yeah, kind of euphoria. There's no worry in the market right here.
Yeah.
And so until we do get worry, and the trend is to get up to 1.2, you don't have a worthwhile bottom. So I'm thinking this at least sideways. I think the upside at the moment is done, and it won't get a bottom until we start seeing the trend. The 10-day trend gets up around 1.2, and I think that's probably going to happen in October. It's not happening in September yet, and it may. When these things to get that trend going to 1.2, you actually need a decline.
Yes.
So. I don't know how the next decline is going to be, but I don't see any worthwhile bottom forming here. And there's still a possibility we may get down to 420, which is basically the previous highs. And we broke out of that high area with a sign of strength. And so I think we could pull back to 420, which is a long ways down from here. I don't know if we'll make it. But
no, I can see that because
you'll see a trend of a 1.2 or higher.
Right.
And so we haven't got that yet.
No, I can definitely see that because, I mean, you were getting, the trend readings that you needed at 433. I mean, that wasn't even a big retracement. People were basically, saying, hey, man, I'm getting out of here. So 420 is a whole different ballgame, man. Do you know what I mean? Yeah.
Yeah, 420. So that's pretty important. So let's look at 5 real quick.
Okay.
This is just a short-term picture. And you got it up there?
Yes, I do. Yes.
All right. Okay. Yesterday we had a little gap on September 6th. I got that pointed out in red.
Yep.
Gap test on lighter volumes bearish. Well, we hit it yesterday, and so I thought, okay, that we couldn't get through the gap. So most likely we'll go down if you can't take out the previous high, which gap is considered like a previous high. Gaps are resistance. you can't take out the previous high, you'll try to take out the previous low. Well, the previous low is the last week's low. And so I'm thinking we're going to go back there. And if you're looking at the trend today, we're not doing much. So I don't know. And this is expiration week, which normally leans bullish. So I don't know what's going to happen. Maybe we go back to the bottom of the trading range, which is the August lows. That's a possibility. It's kind of hard to say here. I'm afraid to bet on either side here, going long or short.
I can see that. It's almost like, we're still in summer trading. It's sloppy. You don't have buyers and or sellers. You know what I mean? Every time we go up, the volume drops off. We go down, the volume drops off. The volume's going to be anemic today on the way down. It's unbelievable,
Well, actually, I'm watching volume today. I want volume to be higher than yesterday.
No, I know that, but it's not going to be.
Yeah, so you can keep going down at least.
Right.
But volume,
I know.
it's pretty pathetic. I think we will probably break yesterday's volume. So we're testing yesterday's low and higher volume. So we'll probably go a little bit lower and maybe go back to, last Thursday's low? Or whatever.
I got, Tim, right now on the NYSE, I only got 395 million. And, normally when that happens, yesterday we did, let's see, we did 895. I mean, I think we'll probably do like 750 or something. But 30 minutes. I don't think we'll see. We know how this goes at the end of the, that's where the volume comes in. So, yeah.
Right. So anyhow, I usually get more excited about the market when everything started blowing apart. And
I agree. Listen, I agree. I'm not. I definitely agree. Yeah, right.
And you get this doldrum, I guess. It rallies, can't go anywhere. Declines, can't go anywhere. But the best trades come out of where the maximum fear is, and that's when VIX is rising.
Yes.
And actually, if you look at the bottom window or second window up, that's the VIX, which is a little bit troubling here. You only got a 13.92. That suggests we're still in an uptrend.
Yeah.
But the bottom window, which is a 10-day trend, is down to 0.95. So it's kind of contradiction. Normally. Right. So I don't know. There's no fear here whatsoever.
No, there's not. There's not.
I'm waiting later. I think the October, scenario is going to fold out because I think the bigger trend's up. I think for the years out, we are going to break some new highs, but we need a trend up around a 10-day trend up around 1.2 to get enough power to get this thing going up to the upside again.
We need a good scare first. Stay right there, folks. Tim Ord, Tom O'Brien, we're going to be coming right back. We have the Dow Industrials right now down 26. NASDAQ's off 145. S&P's down 28. Don't forget, folks, you can contact Tim every trading day. Has a great newsletter. It's ord-oracle.com. ord-oracle.com. Tim and I come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. The Dow Industrials right now down 25. You get the Nasdaq off 142. S&Ps are off 27. We're talking with Tim Wood as we do every Tuesday and Thursday. Okay, Tim. So, which chart would you like to look at?
We're getting back to GDX here.
Okay.
We'll look at the bigger picture, kind of the intermediate picture, and then we'll look at the short-term picture.
Okay, cool.
So you can get a feeling of what's going on. But chart number one, second window down from the top, is the bullish percent index for the gold miners index / GDX. So it's a ratio.
Yep.
And what I did was take the RSI, actually the 10-period RSI works better. And when the 10-period RSI of this ratio gets below minus 25, you're looking at a bottom. And the last time the signal to bottom was last August. And if you notice, last August, that was a decent rally. So it fell back down again. It's currently in a buy signal right now. This is an intermediate-term type scale. So these type of signals can last a year, a couple of years, sometimes 3-4 years. So it's on the bigger time frame. So it did pick out last year's low. Now it's picking out another low. So it's all, it's actually a year apart. So anyhow, we're still below the RSI on the 10 period 15.42 is put as of today. Anything below 25 is a buy. So anyhow, it's on a buy signal. So that's the bigger time frame. That predicts the market is making a low. And this is saying, it doesn't say, we may have already seen a low a week ago, or we may be seeing it right now, or whatever. But we're in the vicinity of making a bottom right now.
Yeah. Well, it's interesting, Tim, is that they've been slamming the gold contract. In fact, we had a call at the beginning of the show, but yet the GDX is hanging tough. So it's pretty cool. I mean,
so that ratio is rising then. So gold's down and GDX holding steady.
Yeah.
So that ratio is rising. So that's a bullish thing. So when XAU or GDX outperforms gold, that's what happens to bull markets. The issues will outperform the gold price.
Right.
And so you want that ratio to go up. So I'm not looking at gold right now. But anyhow, let's flip to the second chart. And this is chart number 2, which is the the bottom window makes the most sense.
Okay.
And this is the 50-day average of GDX up-down volume percent. So it measures the volume up and down. So the next one higher is GDX advanced decline percent with the 50-day average. But I found over time, the up-down volume is more accurate than the advanced decline. So wherever that may be.
Yeah.
But anyhow, we talked about this particular indicator in the past.
Oh yeah.
And when it hits it below minus 20, which it did back in July, and did it before the previous July, and did it before, it looks like about August or September, the last 3 of them hit below minus 20. When it hit below minus 20, the market flips sideways in general. Even though it kind of makes a little bit minor lows, the downtrend in general is over. And the market can flip sideways for, back in 2021, it flipped sideways for 6 months before the rally began. And in 2021, it flipped sideways for 4 months. We've been going sideways now for about 3 months. So we're due for about a rally to begin.
Yes.
And for this rally to begin, you need this indicator to close above zero. When I sent this out to you this morning, it was -2 and change. So it's at zero, but not above zero. Now, we did get above zero last week, kind of came back down, but it's hovering right around that zero level.
And what you're saying is you need it above zero, not at zero, correct?
Well, it's right now as it's below zero, -2. But
no, I'm with you. I mean, but we want it above zero. You wanted like a +1 or something, right?
Yeah, you went +1, right? And we did do that last week and didn't quite hold and fell back down.
Exactly.
A little bit below zero.
Right.
So you're kind of building momentum here a little bit. It's hovering around zero. But the majority of the rally begins when that indicator is above zero. And all the blue stuff you see on the chart is when that indicator is above zero.
Yes.
So sometimes, the rally can... So this is like an intermediate-term rally. So normally these rallies last, several months. The last one we had only lasted probably a couple of weeks. But majority of the time, once they get going, a lot of times, if you go look back in 2019, 2020, it stayed above zero, for at least 6 months there. I should have gone back further. So we're hovering right around where the impulse wave just about ready to start.
Okay.
So this is intermediate term because this is a 50-day average.
Yes.
Okay, we'll go to chart number 3, chart number 3 now.
Okay.
Okay. So now you're into the short-term time frames.
Yeah.
So this is these type of signals can last several weeks or even several months or even a couple of weeks. But this one is on a buy signal, and the bottom window is the 18-day average of GDX up-down volume percent. The next window up is the 18-day average of the advanced decline percent. So the blue area is when both indicators are above zero, and the pink area was with indicators are below, this is -10. So I don't want to confuse anybody, but the 18-day average of the up-down volume advanced decline indicators need both be above -10, which they are today. The bottom one is looks like about +2, and the next one higher is about +1. So both are above -10. So this is saying right now that at least a short-term rally is beginning, and the short-term rally keeps going up and holds above -10, say for a week. If you go back to chart 2, that most likely will flip that 50-day average up above zero.
Which is, I love how you break this down. I know, man, it's so cool, right? You get the short-term one going, the short-term one will get the 50-day one going. Yeah.
Yeah, cool. That's what I'm saying. So it's kind of been going up and down on the short-term here because you got pink, blue, pink, blue,
yes.
whatever. So it's kind of getting momentum, but it's not holding up. But if you also notice, if over the last end of August to the current level, the price of GDX is actually lower. You see that? I drew that red arrow line there.
I see that, yeah.
On the GDX. Okay, if you look at the up-down volume, the bottom window and the next window up, they're making higher highs, both of them.
Yes.
So that's telling you the internals of the up-down volume advanced decline indicators are stronger than what the price is saying on GDX.
Right. Right.
So you got a positive divergence going on here. So we may stay above in the blue area longer because we've got a positive divergence, and we may, if we can hold above, the -10 area for another few days, most likely chart number 3 will get above zero and stay above zero.
Yeah.
That's what I'm saying. But the short-term chart needs to stay above the -10 area.
Yeah, if we go right back to the gold contract today, it's interesting, man. They jammed it down to 1929. Yeah, it's at 1936, still down $11, but the GDX, bottom line, it's still green, so is the XAU and the HUI. So Listen, Tim, I love your breakdowns, man. You have a great couple days. Safe one, because I'm going to be talking to you on Thursday, man.
All right. See you then.
Thank you, man. Stay right there, folks. We'll come right back.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Dow Industrial's down 8, NASDAQ off 131, S&P's off 25, and 8:30 tomorrow morning, folks, CPI, and that's the bottom line is that if inflation is pulling back, we're going to see it. And my take is that inflation is pulling back. I mean, it has pulled back dramatically, not in a small way. So we'll see how this baby shakes out tomorrow morning. And that's going to make a huge difference. What the market will move. The dollar's going to move. The S&Ps will move. The bond market's going to move. All the above is going to move. Let me just see if I'm wondering what they're looking for. So... okay, so the survey is 0.2%. Interesting. I mean, if it's a 0.2%, man, the bottom line is that you're at 2.4% inflation, and that was pretty quick, right? And yeah, that was about as quick as you can get. I'm sorry, that was the release on August 10th. So we're waiting for the next one. Yeah. So we'll see where that baby shakes out. My take here is that you're going to get a low one. The reason I'm saying that is that, so if we were coming into this and the market was going up with lighter volume, I would be saying, okay, we're going to get a higher one. Because what we're doing not, though, we're coming into this and the market's going lower and there's no sellers. So that's saying that what you're going to see is that you're going to have a lower one, which is going to be bullish for the market. That's just kind of how price and volume works. It's pretty wild, man. It really is. You know, Apple's having a hard time catching a bid. And they have their, pony show going on right now. It's Apple's down 310, trading 176 rather. And you get big volume out of it. So they're going to have it looks like they're going to have a harder time getting some of these prices they want for these new phones. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Come back and visit us 9 o'clock tomorrow morning. CPI is going to be out. A lot of good action tomorrow, folks. Look at them, folks.